Hey everybody, Loren here with Joe Mass. Just wanted to shoot a quick video and give you our thoughts on all that's going on here in the market and the economy. Many of you we saw last week. It was so great connecting with, I think we had well over 200 clients at both of our State of the Market events. And it's always fun seeing everybody, giving each other a hug and talking about what's going on in the economy. But many of you weren't able to attend, weren't able to make it. And so we just wanted to shoot a quick note with some thoughts on what we're seeing. There's been a lot of headlines, a lot of uh, choppiness in the market, and as always, it's important for us to not just have a really good plan for you, but it's also important for us to communicate, right, and keep you in the loop. Joe, how are you doing tonight?
I'm just right. You can hear me. We're having some technical difficulties with my speakers, so if my lips are moving and you don't hear anything, I'm really talking. So yeah,
I love it. Well, it is Thursday evening. Thursday. Let's see what today is. Hard to keep track of.
I was going to say it was Sunday, so I'm glad you said it was Thursday because it is Thursday.
Yeah, Thursday the 6th, and wanted to give you some thoughts on what we're seeing. So first of all, market choppiness, headlines, and pullbacks. These are to be expected. As we talked about last week, last year, 2024 and 2023, two incredible years. I think the first time in a couple decades we saw two consecutive years of 20 plus percent in the market. And so as we talked about, we're not expecting a third year in a row of 20 plus percent returns. And even though we do see a lot of economic opportunity moving forward, pullbacks of 1%, 5%, and 10%, those are typical. And to be expected. And so, right now, as we're recording this, the market I think is down 2+%, a little bit, and so we are seeing a pullback. But really, your plan is not going to be determined exclusively by what goes on in the market, right? We have really, with great thought and care, made sure that we've positioned everyone with enough cash, either within, at the bank or within your portfolio for emergencies, liquidity. And then we preserved your income needs in a protected sleeve, right? And so any income that you might need in retirement, if you're in retirement now or kind of shortly after you retire here coming up, it's not currently in the stock market. Right, it is off to the side, so that we can generate that predictable and consistent money for you. And then the stock market money or the red money, that's where we're looking to take advantage of opportunity, right? And we'll continue to adjust as we see different economic indicators. But just wanted to let you know that we're not over here freaking out based on a 2% pullback. But the reason we're shooting this video is this is your money, right? And so we want to communicate and let you know what we're seeing. Joe, can you kind of share a little bit what you're seeing as far as a shift from in a pullback from growth and value? We talked about how we've seen the Mag 7, Nvidia's have a major run the last couple of years, and now we're kind of seeing things shift a little bit. Can you talk a little bit about that?
Yeah, you betcha. And so for those of you that came to the State of the Markets, it's kind of a continuation of that conversation, and for those who didn't, it's going to be a new conversation. But we always look to see what's in favor: risk on, risk off, value or growth. And right now we're starting to see that rotation back into dividends and value. And that's, the Meg 7, the whatever I can't remember what they call them now, Meg 7.
The Fang, they used to be the Fang.
Fang, that's it. That's the word I was looking for late at 10:30 on a Thursday. My brain sometimes doesn't work well. Um, but don't worry, that's not when I'm doing our stock picks. We do that earlier in the day, when the brain still works. But they're taking a little breather. But these companies are world-class companies, right? They've got great management. Whether you like them or not politically, that's not our deal. But they're good at what they do, whether you like it or not. These managers are good. They're good allocators of capital. They have lots of cash. They're world-class businesses. They're leading in AI and innovation. So they're good companies, and they just can't go up 300% every year. So picking on Nvidia, because that's the big darling. I don't know. I don't have it up exactly right now, but what's it up? 286% or something, and over the last year. And so, if it pulls back 10 or 20%, I mean, if you were in that, you're still up 260%. So we're not overly concerned if they take a little breather. Now, they've just run very fast. If you're a sprinter, you can only sprint for so long. Then you got to catch your breath and walk a little bit before you can sprint again. So again, companies can't just grow their earnings, or they're not rocket ships. These aren't hockey stick companies. So we're not overly concerned for the long term when we're looking, 3, 4, 5 years down the road. If we're looking at 3 or 4 weeks, that's a different story, and that's why your CPR plan is so important. That takes away that uncertainty and the volatility.
Yeah.
So,
Well,
for example, Loren, our hot portfolio last year, right, was tactical equity, and it had a lot of growth in it, and that's where the return was coming from. That right now is still outperforming the market, but it's taking a little breather. And now it's the values and dividends that are performing exceptionally well. We also have portfolios where now again, not all of you are appropriate for all these portfolios. So, and some of you are into them, some of you are not. That's a decision that you need to make with your advisor. But from my chief investment officer role, Loren, like the sailboats, that's where we're supposed to be shorting the market, and we are. That's where we're supposed to be increasing cash. We are. That's where we're trying to be much more tactical, and we are. And that portfolio is basically flat compared to being down 2.28 on the S&P 500. So,
well, and Joe, one thing I was going to say is that a lot of times when you see a pullback, the natural emotional thing is sell. And a lot of times when things go up, the natural thing you want to do is buy. And so our job is really to help you make the right decision, which sometimes means it feels like the wrong decision, right? And so as we're looking at what portfolio makes the most sense, our job is to make sure that we stay the course. We don't get too excited when the markets are doing well, get too discouraged when the market's doing poorly, and then communicate, right? Let you know what's going on. But we haven't seen anything recently over the last week or the last month or last quarter that I would say has fundamentally changed our outlook on our clients' cash protection and risk allocation. But we're always adjusting the portfolios, right? And
right.
so whether it's a tariff headline, whether it's a trade, potential trade war, some companies are going to be impacted more than others, and it's our job to find the opportunities. But we're not going to be making decisions based on what stock we think is going to do better between now and next Tuesday. We're really going to be staying the course for your retirement plan, and that's going to allow us to stay on track.
Yeah, and that's a really good distinction. I want to say that one more time, even though you said it way better than I'm going to repeat it, but it's a very important part. We've seen no evidence fundamentally to change your allocation of your ABC or your CPR. We definitely see evidence to make adjustments in portfolios at the portfolio level in the red money section of your ABC plan. And we're already doing that. We do that automatically. Okay. So we're not saying, oh, tariffs don't matter. Oh, headlines don't matter. Oh, they're not looking. No, they do. Growth matters, value matters, these rotational issues matter, but we handle that at the portfolio level as appropriate for each portfolio. There's change there. But at the strategic macro level, when it comes to your financial plan, nothing has happened that's going to really alter that at this point in time from our perspective.
Yeah, and there's some conversation. I mean, I've had several this week where, a client, they might want to go from a 60-40 portfolio to 40-60, and we can have that conversation. But just know that we're proactively looking, monitoring, adjusting. If we think that there's a change that's warranted, we'll give you a call, we'll reach out. But just know that we're here, right? We're on your team. And in good economic times and bad economic times and good headlines and bad headlines, we're not going to run from the news, right? We're gonna lean in, communicate, make sure you are kept in the loop. And I did want to let you know that we did send out the presentation last week if you weren't able to make it, but you should have an electronic version that was sent out. If you didn't see it or you don't have it, you can feel free to send us an email or give us a call, and we'd love to get that to you. We also put together an educational white paper kind of explaining what tariffs are. The pros, the cons, the economic case for them, the economic case against them, because education is important. And so we want to keep you in the loop. I think one other thing, Joe, that I would say is just as a reminder, right now is tax season, right? And so if anybody has any questions on their 1099s, any K1s that you're getting, just know that we're here to make things simple and easy for you. So call, reach out, send us an email. We'd be happy to jump on the phone with your accountant, with your CPA. Our job is to help, not make things more complicated, but to really make things as simple as possible.
Lauren, let me just, I'm a clock builder, guys, and I apologize in advance, but I want to add one piece of clock building to the tariff conversation. You've heard me say in the state of the markets and maybe even outside of that that tariffs are going to hurt some companies and some companies will be okay. And we're going to try to find the companies that are going to be okay. There's also something that's called the tide, which we call beta. And when the tide comes in, it floats all boats. So when the tide goes out, all boats, not sink, but they go
They
down,
go out.
go out. And so right now, as this tariff strategy is being deployed, because some of this might be permanent, some of this might be rhetoric. As I'm looking at my Bloomberg terminal right now, I got news story after news story that the tariff deals are changing, the things are changing minute by minute. So some of this really may not be permanent. Some of this may be temporary. But as we're all trying to get used to this tariff and what the uncertainty is, it's going to affect more stocks, the market, the beta effect temporarily, right? And so where a stock that might benefit from a tariff, it might be going down right now because all boats are, right? Because it's affected by the beta effect, it's affected by the tide. But in the long run, it's going to be fine. So some companies are going down right now because of the tariffs, and they're going to permanently stay down, and they're going to be permanently affected. And some of the companies are going to go down what I would expect to be as a temporary decline because the whole market is kind of going down and they're getting caught up in that beta effect. They're getting caught up in that tide, and we're not overly concerned. But right now, all stocks could go down, even though some of those will expect to continue to stay down, and others will be expected to turn around and go up. And we have live empirical evidence of that, Loren, because again, we have value portfolios, dividend portfolios, growth portfolios, and we're seeing that the defensive portfolios, the value and the dividend, are currently outperforming the growth. So I hadn't talked about that in the past. I've talked about that there will be winners and losers, but currently there could be a bunch of losers temporarily until we get through some of the short-term uncertainty. So if the tariffs remain intact and they're instituted over a long period of time, some companies will be hurt more in the long run, while others might prevail in the long run, but are temporarily getting caught up in that tide. Okay, and that's normal. We understand that.
Yeah.
But a little geeky. I don't know if that made any sense. Or maybe Lauren will have to interpret that. But
All those engineers out there are like, that's exactly what I was looking
yeah,
for. So
I want that beta effect. Yeah.
I love it. We got it. We had to throw the word beta in there at least a
Yeah.
couple minutes ago. So we'll let everybody go and enjoy the rest of your night. I guess I don't know when you're going to get this. It probably won't be at 10:30 at night, but just know the heart of Sound Planning Group has always been to not just do a good job, but to communicate. And kind of with some of the headlines going on this week, and with many of you not able to attend the state of the market, wanted to put together a video with Joe, shoot it out with our thoughts. As always, we will communicate if we think an adjustment is warranted on your plan. But as we kind of go through the tax season, feel free to reach out if you have any questions. We are here to help. We are here to serve. We are here to make sure that that your plan stays on track, and we're committed to that. So for until next time, wish you guys all a great week. Hope you are safe and healthy. Enjoy your time with your family, and we'll talk to you soon. Okay. Thanks again, Joe, for joining us.
Thanks, Lauren.